All right. So this video, we're going to go discuss a few things. Some of this is going to be in response to some of the questions and comments that I've gotten on the YouTube channel. And this will hopefully clear up some things. You know, I just recently put out a video just the other day on how to install, as a member, if you have the RocKBot scripts, the scripts for the Super Signal, which is a NinjaTrader trading script. And, you know, so I discussed that. But I had some comments on the videos talking about bots and what are some, you know, everyone wants to know what the results are and what the back testing says and stuff like that, and verified results. And, you know, some days it looks good, some days it doesn't look good and stuff. And you have to remember, and this is what the video I really want to talk about, is, you know, I've been trading for a long time, since, you know, full time since about 1996. Started doing the show in 2007. But since, you know, all through that time, I've studied the markets in and day out. Now, I'm in front of the markets every day doing the show. So, you know, I'm really focused on the markets more than probably anybody else over the last 15 years, it seems like. So, you know, over time, I've, you know what works, you know, what I'd like to look for. It becomes an easier time trading because we're no longer learning on the job. We're just waiting for our setups and developing patience and discipline. That's the key to trading, is to develop patience and discipline. You know, you will have opportunities, logical opportunities, mathematical opportunities, and other things. But again, just like going into a casino and sitting down at a random table and just taking trades and stuff, it probably won't work out for you because the house has the edge. Unless you have the edge, then, you know, that's probably a game or a career you don't want to go into if you don't have the edge. So the edge for us is identifying, you know, a certain couple, 2 to 3, and very, very important high probability patterns, and you know, focus on them so much that we know how they build themselves, how they act when they don't act right, everything in and out about divergences, the multiple time frames that come in with the divergence, the stochastics, the different bands of stochastics I use, the 9, 3, 14, 3, 44, the deep dive into George Lane's thought process, and everything about it. So we have, you know, I consider myself a well-rounded expert in stochastic divergences in trading, and just everything about it. And you know, and I'm very comfortable and very confident to say that, you know, you won't find much better than this. You'll find things that are equal to this, because if something's great, it'll be great as, you know, it will be great. And there's a lot of indicators that, you know, work on the same concept, momentum and stuff. So you have MACD, you have RS, you know, you have these other indicators that if one indicator gives a buy signal, most likely those other good indicators will also give buy signals too. Well, that being said, we want to be able to be in the market at the right time, at the right place. And even in that point, it's difficult. So when we talk about a bot trading the markets, you know, there is no holy grail to it. There's so many moving parts and you know, things that are happening around us trading, you know, behind the scenes, electronically, in algorithms and programs and trading bots and high frequency traders. There is so much going on in news, buy programs and sell programs. It's very, very hard to, you know, count on something just to work flawlessly. You know, there's too many moving pieces. But what we found out is certain areas that give us signals, and I've identified these signals and how strong they are when you combine with other signals. These are areas that we typically get these big moves in. And these big moves come 80 to 90% of the time the setup is. And the other time they usually fail is because, and this is the key to trading right here, is identifying when a great setup will fail, because all great setups eventually fail. It's like having a great hand and having a bad beat in poker. You know, you have a great hand, but it doesn't mean it's going to win. You could have, you know, and there's a lot of you know, analogies that I like to use just to kind of get that point across, because everyone, you know, relates to things differently. So when I first put out the bot or developed the bot, it was based off the delaying divergence. And then, after studies, many studies with stochastics and using my 4 bands of stochastics, which I call the quad stochastics, 9, 3, 14, 3, 44, and the 60, 10, and realize how they work together. And then laying on top of that, the divergence setup, that's how we become for the super signal. That's when we have a quad rotation, multiple time frames lining up, and a divergence. And this is it's usually unstoppable. But there is some chop sometimes around it. And again, nothing is going to be perfect. And the big thing with trading, and trading a bot, I don't like to let a bot just run by itself because of the chop. And we could always adjust this and say, and make it look, I could always take a bot and show you back test. I'll do, back testing and optimize it that it has the best parameters in there, and it's going to show you the best returns. But that's not realistic. Every time I use the bot, I make sure I know what the market conditions are, and then I adjust what I think the market's going to give us. I want to be able to get into a divergence here, and then if it does go against me, understand why it's going against me, which I normally will see because of my 60-10 and the fast rotation of the 9-3. And if it's not going to go against me and we want to hold it longer, I'm also reading the 60-10. So every time we do get a signal, I'm analyzing the conditions surrounding that signal. I want to, make sure everything is in our favor, in our favor. And if it wasn't, I'm just letting this thing run overnight, and it wasn't in our favor, I'm not here to say, all right, that's not a good setup. I know where to take it off. I want to let this bot get me into that trade, but I want to manage it afterwards. All right. Here it says, I'm looking at the thing. So you configure the bot to take, all right, so someone asked, can you configure the bot to take full profit? Yeah, you can configure it to do anything you want. That's the beauty of it. You could have a different trailing stop, and that's when this all changes. You could look back at that saying, well, instead of having an 8-tick or a 10-tick trailing stop, I can move it to a 20-tick trailing stop and really take advantage of long moves. Now, before we go any further, this system, the Super Signal script is excellent for prop traders. The reason I say that is because it does give you those big moves, and there's something about taking a shot, especially with a prop trade, where you have to. And again, I always use an example of a 50K account, and you have to make $3,000. When you get those accounts and you get them at a good price with a coupon, the risk reward is incredible. I mean, you just have to get in on a super signal and pretty much put a stop, give yourself, a little bit more, just a little downside, just in case. But if we're watching this together, we even know when it's going to drop. So I'm not even going to use that stop, probably not. But the entry is going to be the best. These entries go and on, and usually one trade will qualify you. And when we look back at this, and now I have to remind you, this right now is on the 1 minute time frame. I usually want to keep it on the 300 tick time frame or the 1000 volume, but because the script and the formula is so good, it'll and there's another great thing to do on this, and I've been telling our listeners and members here, is to use the script on multiple parameters, meaning multiple time frames, or what we use as time frames. So I would recommend putting the script on 4 different charts, maybe even just 3. Put it on the 300 tick, the super signal on the 300 tick, which is here. All right. Now, we just had one. Market's open here. Let me see. I have a short in here right now anyway, so let me see. The market just opened up here. I might take this off just so I can concentrate. All right, get out of here. The one thing about the bots here sometimes, not the bots, but the scripts, the prop trade. There it is. I just got filled. Sometimes they're a little delayed on the open. All right, so this is on the 300 tick chart. So here was a signal here, and again you can see it moved up a little. First profit, because it has a decent. I'll show you the parameters on this one. This is the one we've been kind of using. Parameters 6, 3. I took 3 off early, but again, this is on 5 contracts. But you can put whatever in that's actually trading the MES when you could trade the ES if you wanted. It doesn't matter. You could adjust it on all you want. But again, you could just carry it all. You know, just take it all. Let's see. What was I? Yeah, I could actually show you that in a second. Right now, I just have a combination of 5 contracts, taking 3 off after 6 ticks, taking 1 off after 15 ticks, and having a trailing stop of 15 that activated after 6 ticks. I think that's it. I think that's on that. Let me just fix this. Let me just put that on the bull now. I'll let that run tonight, actually. All right, so again, that was the setup right there, and again, you could see how far it went. It took it all the way up here, the 300 tick. Now here we had, this is the example I wanted to show you. Sometimes you will get a move down, and you'll get a trigger, but the stochastics are not fully oversold yet. It's a situation where, you know, remember, we have a combination of things happening behind the scenes. We're waiting for all our time frames to kind of get down to an oversold level. The 60-10 represents our 5-minute time frame. So we want to get that closer to oversold before going long. And when that all lines up, like down here, this was really a good one, but for some reason this on the 300 tick, it did trigger here. Started to move up a little, 1 tick up to the 20-period moving average, and then it rolled over. Now, to see, you know, to understand if you're using the 300 tick, I put this in. If you're 60, this is a rule. All right, so this is going to kind of almost make it unfair, because if you could adapt this in your trading, you might not have any losses. Honestly, if you could adapt this, your losses are going to disappear. Whenever you have a either downsloping 60-10 or a 60-10 that's underneath the 20 line, all right, and we're not above the 20 line, not sloping up or anything, it's pointing down. It looks very, you know, we're actually pointing down. We got to bounce up here to the 20, and what happens is this turns over. So where did that turn over? Is this candle right here. Now we might have got in here, candle before, and it's not like we're getting out after it breaks down. Once it crosses the 9-3 crosses back over, that's when we want to take that off. But only when the 60 is pointing down or embedded. So that's actually what we call a bear flag. So we're able to identify a bear flag and a bull flag by the combination of that 60 and the 60-10 and the 9-3. We do it all the time using the other charts. Remember, this is what we let me get this up here. This was you see these flags here? So when this is embedded here and we look for these rotations, this is what we call a bull flag. It's a fast rotation to 20. The stochastics are holding above 80 or showing that upward, you know, strength, and this has been embedded here. And every time we get oversold on the 9-3, it's better to go long. So I put out these flags, we point them out. Here was another one. There was a divergence right here. And all these here, big move up, big move up, big move up. This was another nice flag here, the rotation, and it was embedded, and it comes down to that 80 line. So these are all bull flags, and it popped again. Now the same thing with the, like I said, we were just, if you could recognize a bear flag, which is basically the embedded stochastics on the bottom and the rotation up. And this is really weak when it doesn't fully rotate up, but it crosses back down. And that's just your signal to get out. And if you could get out and remember doing that each time like a robot, if you're a robot and doing that, not worried about anything else, and just doing it and saying, that's my business plan. If it fails, it fails. There will be days like that. Most of the time you're going to get, look at that. That was one fit. Most of the time you're going to nail the bottom. You're going to nail the bottom. I mean, look at that. Look at this. And even though this took it off up here, took it off because it came back down, you could have caught all this. Like I said, when you're trading the prop accounts with these, it's not about being perfect, super perfect. It's about, having the opportunity. You're very close to a major pivot. A pivot is where the market moves from one direction to another. This identifies both multiple time frames lining up and a divergence. And a divergence usually is a sign of a change. And these are most likely going to change. And you see it. I mean, I'm just zooming out. You're seeing it. I didn't do anything with this. It does it itself. This is on the 300 tick chart too. Now, the tough thing is always the entries are there, and the first push. And a lot of times you'll get out, or you'll get, it'll see it come back and get shaken out, and then it'll take off. This is where we have to make a decision, and that's what we've tried to pay attention to, that 60-10 chart. The 60-10 stochastic, if it's heading up north of this, then we start to see that there's a bullish flow here on the 5-minute time frame, and that trend is going to last much longer. If it stays underneath that 80, and that's kind of a hard one because we're down here and at a fast we couldn't even tell if this thing was lifting up a little. You might be able to see it was lifting, but it wasn't above 20. And you probably would have gotten shaken out here if you didn't take profits at the. So there's all these little things that have to come into play with the bot. Like, are you going to be able to, take it off when the ones that look weaker should be taken off? I mean, that's. But most of these, you're going to get these. And what's a pivot? A pivot is going to be where the market goes from one direction, and whenever there's a divergence, I look at the channel that the divergence is coming from. And there's usually always a channel. And it doesn't have to be an obvious one. It just has to be that top trend line. It has to go down. And then you could probably put in another one. And basically, whenever you have a divergence, that channel will be broken out of. So you could always guesstimate how far that profit is going to go. And you could do a measured move channel here and just put an opposite channel right up there, and that would be a measured move. Again, here's a any type of channel like this, just a move down, a pivot. When you get a divergence, you typically break out of that pivot. Here, here's another one. I think I already put this one in back in the day. Break it out here, and a nice move up. Now this is all based off the 1 minute time frame, or the slowest time frame. In this case, it's a 300 tick. It's not the 1 minute. And these are scalps. Lots of times we want to take them off if you're in a downtrend. Remember, if you're in a downtrend and this is oversold, remember, this is our rule. We got our quad rotation. Oversold, oversold, oversold. The 44 is oversold too. You just don't see it on here. And you have a divergence probably here on the 9.3. You can start to see that higher low on the stochastics on the 9.3 versus that candle and this candle. It's crowded, but it is a divergence. That's why we got the super signal. Now the super signal, you get a nice move up here. 1, 2, 3, 4, 5 candles. It's moving up. It hits first target. But what happens is we got overbought on the 9.3. So that's your kind of your possible exit scenario. You might want to just say we have a 9.3, even though this is rising up and it looks pretty good. This you could lock everything in on the 9.3 rotation. Because if you go back and look at a 9.3 rotation on a 300 tick chart, most times you're not far from heading back down, bounce, heading back down, bounce, heading back down. Here's a good example of that. We're underneath the 20 here. Right here, we're underneath the 20. Even if there was a signal here, and this popped up here, this got back above 80, you want to take it off no matter what. Popped here, we got divergence here, moved up here, got back above 80, it came back down. I mean, these are short term. Sometimes you see some nice big ones, but overall, all of them are going to give you great entries. I mean, you're seeing it. So I would put it on the 300 tick chart. I wouldn't get too caught up on results and stuff. Get caught up on using this as a tool. When I originally developed this, it wasn't to auto trade. I don't believe in that. I don't believe in auto trading. I believe I'm a better trader than an auto trader. I can read the market better. I've been in the market a long time. I know different types of momentum signals. I know, it's just something about it. I feel more comfortable letting the bot get me into the trade and then me analyzing the trade and saying, all right, where's the trend? Where are we in the markets? How's the day going? Where's the Fed meeting coming up? What's the next lot of news? Is Powell on TV? So many different moving parts. But as you can see, the entries are going to be near perfect. Near perfect. Don't pay attention where it took profits or where the trailing stop came in. That's all put in there after the fact. You could adjust those and make them look sweet. I could say no trailing stop, and all of these would work out. They would. If I put a buy signal in here and said I have a 50 tick stop, and a 10 tick profit, most of them, probably 99% of the trades will work out because we're very close to being a bottom here, and that's a strategy. I mean, we could go long here and never get chopped out here, and eventually go up here. We'll go long here. Just find one that really dropped more than after we got an alert. Find one that just collapsed and dropped 50. Now, most of them are about less than 30 minutes away from a big move. If it's not happened, the big move happened already, and it's maybe 2 to 5 points downside if there was after an entry. Again, we're talking after an entry. Here's an entry, here's an exit. Here's an entry, there's the exit. So we're not worried about I'm saying something that gets in and then just drops. Nothing. These all go up. These all go up. Maybe not right at the same minute, but within 10 minutes, they're all going above their buy entries. All of them. So that's what I'm saying. I mean, the directional trade on each one of these is really perfect. I wouldn't worry about where you're putting your trailing stops or like saying, oh, that doesn't work. You're getting stopped out too early. I don't, this is all defaulted in. You change these. You change them. I'm just putting it in there just to show you this thing is working and really just showing you the entry areas. Here's one that didn't work. All right, so here's one that kind of triggered. There's one. And look at what happened here. We're right down here. We're embedded down here. We're not even moving. And it started to move up here. We barely got a little candle, and then it turned back over. Right when it turned back over, that should be your exit there. It did have a pretty tight trailing stop, so there's no harm done there, considering all the other ones are really doing well. But, eventually you will run into, I don't know what's going on at this point here. It's 8:30, so there might have been some news. Oh, that was news. So, again, we had some news come out here, and it sold off. And you don't really trade around news, or if you recognize there's bad news, don't go long into a bad news. The bot is just back testing areas. So this is probably not even a trade I would even take it right after 8:30. Very important, though. Very important to understand that. And again, that's going out to AZN Maine on the YouTube channel. What I'm missing are your results are not look that impressive to me. You hit your first target most of the time, but I see many of the trades lose on the trailing stop. And again, I didn't adjust that for the thing. I didn't even put that in there. I could adjust it and make everything work out perfect. That's just the defaulted thing that's set on the bot. I'm really talking about entries, discipline, patience, and understanding when to get out. But again, you take that bot and you make yourself a wide trailing stop, most of these will all work out. And it'll be a different story. And just, I'll show you. I could prove it to you right now. Let's see what we could do. So I'm looking back at this and I'm like, what are the ones he's talking about that the second one hit, didn't hit their targets? I'm like looking at all these. These are all perfect. They got out right at the top. And then again, first profit. Again, here's a trailing stop. Maybe the trailing stop here. That wasn't that bad. Anyway, I don't see the what you were talking about, the second profits. These are all just killing it. This is on the 300 tick. So anyway, let's move on, and I'll see if I can program that in after. But everything was looking pretty good. Again, all you had to do is just adjust your trailing stop. You could take more off at the open. You could have more contracts. Remember, all the parameters are there to change it. And you could go to the NinjaTrader optimization, little program they have attached to the chart, attached to the program here, and run it through that, and it'll give you the most optimal parameters. But all right, so let's take a look at now the 1000 volume. So what I would recommend here for Super Signal Plus is to run it on the 300 tick, and then the 1000 volume requires. Here we go. Let's see. This is going to be a little bit different, of course, because not as much volume after hours. At the close here, you had a little pop. Let's take a look here. 1000 volume. All right, so we don't usually trade the murder algo or the last half hour, which is all that. Here's the 2 o'clock. And that was a pretty good divergence here on the 1000 volume. You have a low here, a lower low, or at least a double bottom here, and a much higher stochastic low. And normally, you're not looking at stochastic, or you're not looking at 1000 volume divergences, meaning between the price level and the stochastics. It's not, but it does work. It does. A divergence is a divergence. We are starting to see that diverge in momentum. So that's why we got that setup there. And it ended up being a nice one. So what we notice here is that we have different time frames being hit. So this is at about 10:57. If we go back down to the 300 tick one, let's go back to the 300 tick. $10.57 right there. So if you get one on the 300 and on the 1000 volume one, that is a tremendous signal. So again, the combination, this is kind of really put on the video for the first time ever, this little trick that you could use. Run 2 charts, 3 charts, different time frames. If they both trigger, the 300 tick and the 1000 volume trigger at the same level, that's usually the best area. Look at that. Look at that move from there. Probably went 50 points. It went all the way up. And again, that's on the 300 tick. Now let's take a look at the 1000 volume. And that was that was right here. And again, different chart altogether. It doesn't look as long because it's the volume bars. You're not going to have many bars if there's not money, that much trading. Let's take a look here. That was big. 10:57. Let's see if there's anything here underneath this. All right. Wow, look at that. This one came in, and that was at the lows also. It popped, took profits, came back. There was nothing left to take here. But again, like I said, if you get a good setup, and I have a feeling this was a 1000 volume here. This was the low. Look at that huge move. Let's take a look. That was at, oh, that's right at 4 o'clock. It's right at 4 o'clock, so that's tough. I typically don't like trading right at 4 o'clock. Wouldn't take that. Let's be realistic here. This was right on the bottom too. This was a divergence, I believe, 2 o'clock. All right. Again, here we have a kind of a downward trending stock. You're underneath the 200 period moving average, underneath the 50, underneath the 20. You get oversold here, and you get a signal, and you get a rotation on your 9-3. Right when you get up your rotation, you're at the highs. You know, you're underneath the 200. You have to like have a set of rules saying if you're underneath the 200 period moving average, and you're trending down with a series of lower highs and lower lows, which you are, then if you get a super signal, you should take it off on your first rotation above 20, above 80 on the 9-3, or just the, you know, the signal line of the 9-3, which is right here. So that would have got you, you know, and maybe it doesn't give you a lot, but it gives you, you know, it gives you a win, even though the market here kind of pulled back. You know, just have to establish that discipline to do that. Not only shows longs. Yes, in this case, the super signal is only programmed right now for longs. I am actually at the office tonight working on the short signal. So once I get through these things. So that is correct. Also, if the 1060 Stokes are under 10, would it be better to not to trigger and show that blue line for a long, but only when it crosses above the 10? Well, it does. See, that's, you know, under the cover, it has to, you know, it has to turn back up above this. It has to be greater than the previous two candles. All right, so it has to start to have that momentum pushing back up. As you can see, I'm not going to mess with it too much, the signal, because the signal, I believe, is just about spot on. You know, it is very spot on. You're going to have some that maybe the chop algorithm, some kind of news or something like that. But take a look at this, honestly. I mean, I don't want to really, I'm not going to mess with it too much. You think he thinks the 1000 volume chart is way better. And yeah, this is the 1000 volume chart right now. I'm just reading their comment. That's Texas UAV pilot. All right, Texas UAV pilot. A lot of pilots. I like the 1000 too, but combined, you know, double the pleasure. 1000 volume and the 300 volume together, they rule the world. Fact is, and I come down to this right now, do you have verified records showing the performance of your bot? That's the last one. And like I said, I discussed that earlier in the video, and why the bot changes, you know. It really is about picking your spot. I wouldn't take every trade on the bot. Some of them, if the market's, you know, around news and stuff, so it's not gonna cherry pick areas around the news. It's not going to cherry pick areas overnight when there's no volume and maybe there's just a flat line. You don't want that. I don't want it, you know, it's not meant for that. It was never really. There is things I could do to, you know, one improvement I'm working on is doing what's called a safety net feature, which automatically takes profit on the 9-3 rotation. That way, if you click on that switch or click on a check mark box here to apply it during counter trend markets. I mean, you're really counter trend trading. If you're really going down, then you want to take each rotation off on the 9-3 if you do get a trigger. But most of the time in this type of market, we've been very bullish, and the market's been just chopping around, hanging up here. So these are fine. When the market does go into a corrective phase, we have to adjust. We have to establish more short divergences. We do have a short divergence script. It is, you get the script with the you get all the scripts with the membership, Day Trading Radio. If you have bots on your membership package, you have to have the bots on the membership package, or you could get them at the Patreon site, Day Trading Radio Patreon site. I am leasing them for just $50 a month. You could try it out. So it's an excellent way to test it out. See if it works for you. Understand, you don't have to, you know, or you could get it for free. I mean, you could get it for life and all the upgrades and stuff. Becoming a lifetime member of Day Trading Radio, which is very reasonable. It's on sale, half price right now. So head over to DayTradingRadio.com if you want to take advantage of the bot and all the upgrades you get with the bot here. You get multiple scripts. You get the quad rotation, which is half of the super signal. So if I want to just, let's show you what the quad rotation is. Let's take that one off. Remove it. And let's put, so you're going to get this one. You're going to get the quad rotation trail 60, which is just, it's just I'm using it just as an indicator. There's no buy on this. It's just an indicator. And it's going to put a blue line when all time frames are lined up. It's very similar to what the tradeometer is doing. And the tradeometer should be back this week. Sorry for the downtime on that. We're switching things over to Paul, and we had to get that feed going. So I got to talk to him because he said it would probably be done this week. What was I looking for here? All right. Let's take a look here. Let's enable this here. Now this is you'll see down here it added another indicator on the bottom. So basically here's the quad rotation, and again the quad rotation is going to work on whatever time frame you do. It was meant to work on the 1 minute time frame, but it works just as good. It works great on the 1000 volume, works great on the 300 tick. You can see the basically the same levels are coming in. Look at that. So this you run this. That's actually a divergence too. You can see the higher low right there. So if I clicked on now I put a divergence on that, a divergence, and that's how we came to our super signal. Quad rotation, divergence. That was a Zello alert here, people. Today we put out a Zello alert. Zello is another thing. If you want the instantaneous super signals on your phone delivered directly to you in audio voice, I get on it and I said there's a super signal setting up here at 2:30. The price is that. Put your stop into there. Members get it at Day Trading Radio. We hook it up to your phone. It comes right live over your phone. It's the coolest little app. If you're not a member, you can go to Day Trading Radio or go to patreon.com/Day Trading Radio and look at the Trader Audio Alerts. It's just $20 a month. And it'll go wherever you are. I mean, as long as you don't even have to have your phone on. It could be locked, and it'll come over like a walkie-talkie. That way, if you're stepping away from the computer and there's a super signal, that's what you want. You want that super signal. So make sure that's what we're giving out here. This is the areas that we want to be involved in. After that, the way you handle this afterwards, I cannot really determine how you handle this. When you're going to take profits. When do you want to take profits? I mean that's it's too hard to do that. My job is done is identifying a divergence in the super area. I want to get you in, the chop that comes after it, or the fake out breakouts and stuff. But when we go bird's eye view on these things, we usually see that wow, these were great levels. They're usually right on the lows. That's the that one. Let's take that one off for a second. Now you have the regular divergence one. Oh, you have the bull and bear flag. So remember we talked about a 2020 bull flag and 2020 bear flag? Let's put the 2020 bull flag up here. Now, I have the parameters. It takes a trade for you. It's not as complex as the super signal. You don't have all these different parameters, but you do get to take first profit, then you have a trailing stop loss, and how many contracts. So I just leave, again, lots of times I'll just leave the default. Depending on the market conditions, you want to adjust this. This is really tight on the stop loss ticks. It's only 6. That's nothing, 1.5. So, you kind of want to adjust this on how you analyze the markets. It could be 8, 2 points and stuff. It could be 4, whatever. 3 slots, 2 off. But this is this is going to be improved, actually. This is a basic flag setup, but I call a flag better on the show. So I honestly believe I call a great flag on the show because I could this is, you know, this is kind of, it won't, sometimes it'll catch a topping flag, which is a reversal area. And sometimes it'll miss it just by, you know, not a perfect setup, you know, and those perfect setups, like I know this would be a flag for me right here. Pull back, hold above the 20. This got very close to the 20, but because we weren't under the 20 at the time, it didn't show up as a bull flag, and even though this one was probably good enough to take. Here we had one here that we got oversold. This was not embedded here. It was probably embedded, but it was borderline. I'm going to adjust this so it's above 85. I prefer people to look at your bull flags and take them as, I don't like the script on this as much, you know, because I mean, here's a nice little one, you know, but it's again, it's all about market, understanding the market conditions and stuff, and seeing these little flags. Let me jump off of this one. I'd like to call the flags myself. I'm really good at that. So let's take that off. But you get that anyway. You get the bull and bear flag, and then you get down here. This is really pretty good. This is the well, we'll put in a short divergence here. We'll show you the short. The buy is right there. But again, why use this? Why use the buy and short divergence when you have the super signal, and it works so much better? But we'll put the short up there because we don't have a super signal short yet. So you could use a regular short. Now the short parameters are a little bit wider, 12, 24. Again, that was just at the time I put these together, the market was giving us big moves, so I made it a little bit more, you know, it gave us a little bit more room on that. But normally it would be like 615. You could do your stop loss at, trailing stop at 6. And then you could do, we'll use the stop loss at that, 12. Trailing stop 6. So it's a break-even trailing stop. Let's see what shows up here. All right, and a nice short there. Took profits. That doesn't look too good. See, I recommend no shorting in this market environment. This is divergence is going against the grain. Do not want to do that type of trading. Not seeing anything else here though. That could have been a good one here. Not a pure divergence. Don't have a program for a pure divergence, but that could have, no. Let's zoom out here and see if we can get a better view of that. Not much there, huh? Well, that's a big short right there. Oh yeah, so that was the high candle right there. That was the confirmation candle right there, and then that took the trade. You can see the lower stochastic failure here. Not much going on there. So yeah, but there is time for shorts, and that's when the market is pulling back. So. And then we're definitely not in that phase right now. So I'd be cautious on using certain things like that. It's a pretty decent low, high, and then a higher, nice divergence short there. Anyway, you see what's going on there. All right, well that's it. I wanted to just point out some things to you. That's the Thunderbird short setup. And so you get that one. The long setup is just like the Thunderbird. That's like the super signal divergence. And I think that's it right now. 5 scripts. Let's activate the super signal quad. We'll put it on the main account here. We'll let that probably run overnight. We'll put it on like just 3 contracts. Nothing severe. All right. And that's where we are right now. So I appreciate the questions on the YouTube video. Hopefully this answered some of those questions, answers to those questions. We did look at the 1000 volume, right? Let me look at that 1000 volume here one more time. Oh yeah, look at that. Doesn't get better than this. So 1,300 combo, and let it ride. The prop accounts are great for this. Apex, DTR Apex is a coupon code for 72% off on the Apex one. I'll actually put them in the link. If you need help setting it up, that's what I'm working on tonight. I'm actually getting a video for a couple people who are trying to set that stuff up. I'm going to do a video next here live on that. So if you're interested, you can follow along. And again, this is the key here. You know, get in and let these things go. Put a stop in at the lows. Let them go with the prop accounts. Take that chance. You're seeing the results. Take profits off. Take most profits off. Let a couple contracts run. Never go under a break. Go break even. Stop so you don't give anything back, and just make these free trades. Half of these are free trades as they are. You know. All right. So let me send this on its way here. Hope you enjoyed that. If you have any questions or anything, email me ironaction@yahoo.com or dtrs@daytradingradio.com. dtrs@daytradingradio.com or ironaction@yahoo.com.